if the license is approved, it would be a, quote, new and unique benchmark for trust in the stablecoin market, as the company would be under federal and state oversight.
To understand why they care now, you have to understand how Wall Street thinks. It's never about innovation, it's about control. When they saw retail traders move billions of dollars across borders instantly with XRP, or when they saw Fortune 500 companies quietly building on Hedera's network, alarms started going off in the boardrooms of traditional finance. Because these weren't meme coins. These weren't gambling tokens. These were system coins, the kind of infrastructure that could make banks, clearinghouses, and even payment rails obsolete. So what did Wall Street do? They didn't rush to buy in. That's not their style. They study. They infiltrate. They neutralize. They suppress. And that's exactly what we've seen play out. When the SEC went after Ripple in 2020, the case wasn't just about protecting investors. It was about freezing a narrative, buying time. Time for the financial establishment to figure out how to transition from an outdated system to one powered by distributed ledger technology, DLT, without losing control. It's the same strategy they've used throughout history. Look back at the rise of the internet. In the early 90s, only outsiders and visionaries saw the potential. Then the big players stepped in, built the rules, bought the infrastructure, and suddenly the open web became a corporate-controlled marketplace. That's what's happening in crypto right now. But here's the twist: XRP and HBAR aren't meme stocks you can manipulate with a tweet. They're not just currencies. They're infrastructure layers. XRP connects liquidity across borders. HBAR secures and governs enterprise-grade tokenization systems. These are the backbones of a new financial internet. So while retail panic sold during market uncertainty, Wall Street quietly began positioning. And the signs are everywhere. Hedera's governing council, which includes Google, IBM, Dell, Standard Bank, and Boeing, isn't a coincidence. These aren't speculative investors. They're builders of the future financial stack. Ripple's partnerships with hundreds of banks and fintechs globally didn't stop during the lawsuit. They expanded. Because even while regulators debated, the world's financial systems were being rewired in real time. What most people don't realize is that institutions don't need to chase hype. They move when systems are ready. They waited for regulatory clarity, enterprise adoption, and government-level validation. Now, those dominoes are falling one by one. When Wall Street talks about DLT integration or tokenized finance, they're talking about HBAR and XRP use cases. They just never mention the tickers. They prefer to keep retail in the dark until the table is set. Because once the infrastructure is built, once compliance frameworks are ready, and once custody solutions are secured, that's when the official narrative flips. You'll start hearing CNBC anchors suddenly praising blockchain for financial efficiency. You'll see asset managers launching institutional-grade exposure products. And by then, it'll be too late for cheap accumulation. We've seen this play before. The same media outlets that mocked Bitcoin in 2013 are now bullish on Bitcoin ETFs. The same banks that called crypto a bubble are quietly filing patents for blockchain payment networks. But this time, the stakes are higher because XRP and HBAR don't just represent money. They represent the flow of value itself, every payment, every transaction, every tokenized asset that moves across borders or blockchains. Whoever controls that infrastructure doesn't just profit, they control the rules of the new economy. And that's what this war is really about. Not price charts, not retail traders, not speculation. It's a battle for control over the pipes of global finance. When you hear Wall Street analysts dismiss XRP or HBAR, remember, the smartest investors never advertise their plays until they're fully positioned. Right now, while the noise distracts most people, the quiet accumulation phase is unfolding, and the clock is ticking toward the moment they flip the switch. Because once they do, once the narrative shifts from crypto is risky to crypto is essential, everything changes overnight. When you step back and look at the entire crypto ecosystem, most projects fall into one of two categories. Either they're speculative hype or they're building real infrastructure. Wall Street doesn't care about hype. It doesn't chase meme coins, gaming tokens, or whatever's trending on Twitter. It looks for systems that solve billion-dollar inefficiencies, and that's exactly what XRP and HBAR represent. These two digital assets were never designed for retail traders. They were engineered for banks, institutions, and enterprises. They operate quietly, without fanfare, but they're deeply woven into the fabric of how future financial systems will function. Let's break down why these two are the perfect institutional targets, and why Wall Street's eyes have been locked on them since before most investors even understood their purpose. XRP was never meant to compete with Bitcoin. It was built to complement the global banking system by fixing its biggest flaw: friction. Every day, trillions of dollars move across borders through systems like SWIFT, a 50-year-old network that still relies on delayed settlements, high fees, and manual verification. Ripple's innovation with XRP wasn't about replacing banks. It was about upgrading them. XRP acts as a bridge currency, a neutral asset that can instantly move value between any two fiat currencies or digital tokens, without pre-funded accounts or intermediaries. This means that, for the first time, banks can settle international transactions in seconds, not days, with near zero cost and full transparency. That's why RippleNet has quietly onboarded hundreds of banks and payment providers across the world, from Santander to SBI, from Tranglo to Novati. And while most people were distracted by price action, Ripple was building the infrastructure for what comes next: liquidity on demand for the entire global economy. Think of it this way: the world's financial system is like a vast web of disconnected pipes. XRP is the lubricant that allows money to flow instantly between them, and that makes it irreplaceable in a tokenized world. Now add this: the U.S. legal clarity from the 2023 court ruling that XRP isn't a security for secondary sales opened the door for institutional confidence. Once that clarity fully spreads globally, and Ripple continues to expand its partnerships with central banks exploring CBDCs, you're looking at a network positioned to handle trillions in value daily. So while retail traders wonder if XRP can hit $1, institutions are looking at it as the future settlement backbone of cross-border value. They're not buying it because of hype, they're buying it because it solves a multi-trillion-dollar problem. If XRP is the liquidity engine, HBAR is the digital infrastructure holding everything together. Unlike traditional blockchains that rely on slow proof-of-work or expensive proof-of-stake models, Hedera's hashgraph consensus is built for speed, fairness, and security at scale. We're talking about 10,000 plus transactions per second, with finality in seconds, and fees that cost a fraction of a cent. That's not crypto speculation, that's enterprise-grade efficiency. But what truly sets HBAR apart is its governance model. Instead of being controlled by a single foundation or anonymous developers, Hedera is governed by a council of global corporations, names like Google, IBM, LG, Dell, Standard Bank, and Boeing. Each of these members operates nodes, makes decisions collectively, and ensures the network remains decentralized yet trusted. For Wall Street, that governance model is gold. It provides stability and accountability, two things most blockchains simply can't guarantee. Now combine that with tokenization of real-world assets, stocks, bonds, real estate, carbon credits, digital IDs. Hedera isn't talking about these use cases. It's building them. Projects like Toko by DLA Piper are already tokenizing assets on Hedera. The HBAR Foundation has launched initiatives in sustainability, fintech, and the creator economy. And with its ISO 20022 compliance and ESG alignment, HBAR is literally positioned as the infrastructure for regulated, transparent financial tokenization. That's why the smart money, institutional capital, enterprise investors, and sovereign entities are quietly paying attention. HBAR isn't trying to be flashy, it's trying to be foundational. To institutions, XRP and HBAR represent the two halves of the new financial architecture. XRP moves money and provides global liquidity. HBAR governs, secures, and validates the systems built on top. Together, they form the kind of ecosystem that's built not for speculation but for integration. When a central bank launches a CBDC, it needs fast settlement and interoperability. XRP solves that. When a major corporation tokenizes assets or tracks carbon credits across global markets, it needs secure governance and scalability. HBAR handles that. This is why Wall Street is preparing to move in. These assets aren't risky bets anymore. They're strategic infrastructure plays. And in financial terms, owning infrastructure is how generational wealth is built. Remember, Wall Street doesn't invent technology. It monetizes it. Once they've built their narrative and secured their positions, the floodgates open. ETFs, derivatives, institutional custody, and payment integrations. When that happens, the price we see today will look laughably small. The world's financial rails are being rebuilt. Quietly, methodically, globally. The Bank of England, the Fed, the ECB, and countless central banks are testing digital settlement layers. Corporations are tokenizing assets. Governments are tracking carbon and supply chains on DLTs. And at the foundation of all that, you'll find XRP and HBAR's fingerprints. So when people ask, why do institutions care about these coins? The answer is simple. Because they're not coins anymore, they're infrastructure. The real question isn't if Wall Street is coming. It's how long until they admit they already have. If there's one thing Wall Street has mastered, it's patience. They don't FOMO. They don't chase green candles. They create the setups that make you do that. And the scary part? They've been running this playbook for decades in stocks, gold, real estate, and now crypto. When you hear people say, the rich buy when there's blood in the streets, this is what they mean. Wall Street doesn't buy when everyone's bullish. They buy when everyone's exhausted, frustrated, and ready to quit. So, how do they accumulate assets like XRP and HBAR without spiking the price? Simple, they manipulate the narrative. First comes fear and confusion. For XRP, it was the SEC lawsuit, headlines painting it as a security scam, exchanges delisting it, and panic spreading across the retail crowd. For HBAR, it was years of silence, low marketing, and FUD about centralization. On the surface, it looked like these projects were dead. But behind the scenes, institutions were making calls, forming partnerships, and building infrastructure. Then comes accumulation in the shadows. They buy through OTC, over-the-counter channels, private deals that don't show up on public exchanges. While retail panics and dumps on Binance or Coinbase, institutions are loading up quietly at negotiated prices. No price impact, no headlines, just strategic positioning. Finally comes the narrative flip. When their bags are full, the same media that once called XRP a lawsuit coin will rebrand it as the backbone of digital liquidity. HBAR will go from corporate blockchain to enterprise-grade innovation. The same journalists, analysts, and influencers who ignored them will start shouting about partnerships, upgrades, and price targets. And retail? Most will buy back in too late, at the top of the new narrative, chasing what they sold months earlier in fear. That's the institutional game. The psychological, not technical. It's played with headlines, not charts. Because here's what Wall Street knows. In the age of information, control of the narrative is control of the market. The only defense retail investors have is conviction, understanding the fundamentals deeply enough to hold through manipulation. So when you see sudden waves of negative news or unexplained price drops on fundamentally strong assets like XRP or HBAR, remember, it's not random. It's a transfer of wealth from impatient hands to institutional vaults. Wall Street's been doing this forever. And this time, the prize isn't just another asset class. It's the future of money itself. Let's talk about something most people don't understand: repricing. It's not just a bull run. It's not just another cycle where coins 5x or 10x. No. What's coming for XRP and HBAR is a system-level repricing, a reevaluation of what these assets are actually worth when the world finally recognizes what they do. When you realize XRP isn't just a coin, but the liquidity bridge for global finance, and HBAR isn't just a blockchain, but the enterprise-grade network trusted by Boeing, IBM, and Google, you start to see that we're not talking about meme coin potential, we're talking about infrastructure valuation. And the scary truth? Most people won't even notice it happening. Repricing doesn't come with fireworks. It comes with silence. Steady accumulation, strategic partnerships, and institutional whispers before the public even catches on. One morning, you'll wake up and see XRP at $10 or HBAR at $2. And it won't be because of hype or influencers. It'll be because the financial system shifted, and the assets powering that shift got revalued overnight. Remember what happened with gold after the US dollar went off the gold standard? Or what happened to tech stocks after the dot-com bubble burst? When the useless projects died and the real ones like Amazon, Google, and Apple got revalued into the stratosphere. That's what's about to happen in crypto. All the noise will fade. All the distractions will burn out. And what will remain are the utility-driven assets, the ones actually solving problems. That's XRP and HBAR. The bridge and the engine. The liquidity layer and the infrastructure layer of the new economy. And make no mistake, Wall Street knows this. Central banks know this. The IMF, BIS, and WEF know this. They're not guessing anymore. They're preparing. The retail crowd is watching charts. The institutions are watching integration timelines. Now here's the million-dollar question. What should you do? First, educate yourself. Don't rely on headlines or influencers alone. Read the partnerships. Study the white papers. Understand the utility. The more you know, the less you'll fall for manipulation. Second, think long-term. Real wealth in these markets isn't made by day trading hype. It's made by holding conviction through fear. Every major wealth transfer in history has favored the patient, not the panicked. Third, don't get shaken out when volatility hits. Wall Street will do everything to test your emotions. Sudden dumps, fake news, coordinated FUD. The goal isn't to scare institutions. It's to scare you. Because every time you panic sell, someone smarter is buying. And finally, position yourself before the narrative flips. Once institutions publicly confirm adoption, it'll be too late. The repricing will already be underway. So if you believe in this vision, if you truly understand what's unfolding, your job right now is to stay ahead of the story. Because history is repeating itself right in front of you. In the late 90s, people laughed at the internet. In 2008, they ignored Bitcoin. And in 2025, most will overlook XRP and HBAR until it's too late. But not you. Not the ones watching this. You've seen the signs. You understand the setup. You know Wall Street is coming. And this time, they're coming for the assets that will power the next global financial layer. So hold your ground. Hold your conviction. And hold your vision, because when the repricing hits, it won't reward the loudest. It'll reward the most patient. If this message hit home for you, don't just scroll away. Hit that like button, drop a ready for repricing in the comments, and make sure you're subscribed with notifications on. We're just getting started. The world's biggest financial transformation is unfolding right before our eyes. And if you're watching this, you're already ahead of 99% of investors.